You're about to join a private conversation between two men who have profited in the precious metals business for over 40 years. On the phone from Maine, Mr. Ted Butler, renowned silver analyst and commodities expert. And in Minnesota, Mr. Jim Cook. His company, Investment Rarities, has been a successful gold and silver dealer since 1973. Listen in now on their private conversation from this morning as they discuss what's in store for gold and silver prices.
Hey, good morning, Ted. How are you today?
Good, Jim. How are you doing?
I read your newsletter that you put out last night, and kind of interesting to hear you say, you've said many bullish things about silver, but I rarely have heard you so enthusiastic about the potential for a big gain in the price of silver.
Yeah, well, it's based on, I try and base everything on hard facts, public data, etc. And we do see something, I see something that I haven't seen before, and that's namely we have a very favorable market structure according to the Commitment of Traders report, and who's long, who's short in the futures market, which is that's been the biggest driver of price. Specifically, the big first day deliveries last week on the July contract, the July COMEX contract, that there were record deliveries, almost 57, 60 million ounces on the very first day, was incorporated in the Commitment of Traders report that came out last night. And basically what it showed was that J.P. Morgan, which had a minor compared to times in the past, a short position, say around 6,000 contracts or so. They've been much more heavily short than that in the past, of course, but this time they went into this July contract about 6,000 contracts short, and that was eliminated by them delivering that amount of contracts, 30 million ounces out of their own house account. So once again, J.P. Morgan is back to no short position in either COMEX gold futures or silver futures. So that's always a big plus when J.P. Morgan is not short, and just gives a good flavor to the whole paper market structure. But in addition to that, we've had this phenomenon over the last 3.5 months now on the physical side, purely physical side of silver, and that's namely there's just been a mountain of physical silver bought and deposited into the world's silver ETFs, led by the biggest SLV, but not limited just to SLV. Some 210 million ounces have come in to the world's silver ETFs over the last 3.5 months, since the dead bottom in the middle of March 16th or so. There's been this rush to buy physical silver, and it looks to me it's not typical retail investors buying silver as prices go up. It looks like exceedingly well-informed and large institutional type investors that have been just buying more silver than in history. Back in late 2010, 2011, when we hit $50 in silver, I claim it was caused by the purchase of 60 million ounces into the silver ETF is what caused the price to run up back then. Well, this time in the last 3.5 months, almost 3 or 4 times that amount of physical silver has been bought. The price has moved a little bit, but not. It's still basically unchanged from the beginning of the year. So it strikes me that this thing is a coiled spring. This thing is like a pressure cooker, even though you might not see it. Looking at the price on a daily basis, like today we started out lower in price, but you can't do anything about that. But if you're looking at the price as being an indicator of what's really going on, you're not looking at the right thing. What's really going on is that we have a pressure building in this pressure cooker that I don't think we're far from this thing. Once it goes, it really goes. I'm talking about, many dollars up in a very short period of time. So that's the way it looks to me now.
You've, from time to time, indicated what you thought would be the free market price of silver if we didn't have these big short sellers on the COMEX, kind of a manipulative position that J.P. Morgan has been in for years. When that's all gone, where should silver be? I mean, we got big industrial demand and a lot of investment demand. Now, where should it be?
Well, I mean, look, I think that's what's going to, surprise people. Should is where will it be? Where should it be? Or price targets that quite frankly, sound almost ridiculous when you mention them. But it looks to me this thing should be many multiples, many factors, magnitudes of what the current price is. And back in when we had a big run when the Hunt brothers came in back in the 70s into 1980, the price of silver ran up 40 times, 40, from $1.29 to $50, okay, in a matter of 7 or 8 years, okay, because it was Hunt brothers buying silver. They weren't buying as much. They weren't buying anywhere near as much as what's being bought today, and we have much less silver today. So I don't want to go so far as to say that the price of silver should go up 40 times what it is now. I mean, that sounds absolutely crazy, but it's done it before, and the conditions today are much greater than they were then. We have more money in the world that is looking to invest in anything. You look at the stock market, they're driving prices of certain things to the moon without any fundamentals. If you can imagine the money focusing on something that has good fundamentals, silver, with the necessity of life, and it's been depressed for so long, it could easily go 10 times or much more higher than where it is now in a reasonable period of time. It's you want to give it some time to run, but I think the big mistake people are going to make, this thing is going to run, when it runs, it's going to run so fast and so far, okay, in such a short period of time that the biggest mistake, I see it coming, the biggest mistake that people are going to make is say, this price is crazy. I got to get out of it. It's too high. It's 50. It's 100. It's whatever number, that it could run to in a very short period of time. That's going to be a mistake because you got to give it time. It's going to run, okay, and make up for the 10, 20, 30 years of suppression, manipulation that it has. It's like I keep going back to this pressure cooker, this coiled spring. It's hard to throw out reasonable numbers, but the average investor stands a chance of making more on silver than anything I can imagine. It's like it's going to be the kind of thing that's going to basically has a potential of radically altering for the better, okay, someone's standard of living. My friend Izzy Friedman got set up for life financially on the run from 1977, 1976 to 1980. It went up, 10 times then. It wasn't even on margin. It was a straight physical purchase of silver that he held. You don't need to go on margin. That's the opportunity that exists currently. And again, I think the big mistake is going to be selling too soon. But look, we'll worry about that, after the thing starts to run.
There's a recent article out by somebody who's sneering at silver buyers and silver investors and suggesting that there's an enormous quantity of silver in the world that's not being counted. What do you have to say about that, Ted?
Yeah, I saw it. It was in the Financial Times out of London. It was, it was really, I don't usually tend to pick on, others' work. I like to just, put the facts out, put my opinion out, and not be so concerned or argue with others. Everybody's entitled to their opinion. But I have to say that this article that you're talking about by John Dizard, it was a pretty famous columnist for the Financial Times. It was highly unprofessional in the sense that it was basically devoid of any real facts or documented data, and it was just an opinion piece, kind of based. All he was really doing was kind of making fun of silver investors. He was like ridiculing them, and it didn't have any hard data whatsoever. But on the plus side for something like that, we don't see too many of these articles. You see some people have their opinion that it's already made up. They have their mind made up that because silver hasn't gone up in price for so long, that therefore they start to invent reasons or they form an opinion to justify the current price, okay? And I think that's what he did and what others do. And it's kind of encouraging because, you always want to see what the other side is saying. If you think something is cheap and should be going up, like obviously I do on silver, I'm very interested in what the other side of the story is. What's the flip side? What's the bear case? What are the reasons given for why silver shouldn't go up? And when you look at it objectively and analyze it, as in this article you're talking about, there's nothing there. He's just like throwing out numbers without any kind.
A couple of people have written that there's an enormous quantity of silver out there, in the form of jewelry and what have you, as if that, will drive. If somebody sells their jewelry, that'll drive the price down. What do you make of that?
That is kind of one of the arguments that are really, really silly, because you got to use a little common sense and a little practical knowledge here. I don't say that there's not a lot of silver jewelry out there and teapots and whatever, but you got to remember, we've gone through a number of big runs in silver, 1980, obviously, and again in 2011 when we ran both times to $50, and that shook out a lot of silver heirlooms and jewelry and spoons and forks, etc. Okay, that came onto the market. That was melted down. And but once it's melted down, it's melted down. You can't keep melting the stuff down, the same stuff. You melt it once, you turn it in. So there's less silver as a result of those big run-ups and melts in the past, okay, than today, than obviously there was back then. And you also have to remember that this kind of silver that you're talking about, jewelry and forks and knives, etc., okay, is not industry standard. Industry standard is 1,000-ounce bars. That's what the COMEX deliveries are based upon. That's what the ETFs are based upon. That's how people do business in 1,000-ounce bars. So if there's many hundreds of millions, perhaps billions of people out there that do have silver, and that's problematic. I don't say that's the case. It's like these are individual decisions that people may make at some point, that takes years to come to market. You can't get enough silver from jewelry or knives and forks to melt into one 1,000-ounce bars that easily. But you were in the business back in 1980, and you were taking in tremendous amounts of silver scrap, they call it, these old knives and forks and teapots and coins and things like that. Are you seeing that today? Do you see any big selling coming from people who own jewelry or knives and forks?
Well, no, I would say none these days.
No,
However, I think
that's the answer.
We get up to
so look, if we go up a crazy amount of price, like $100, $200, I'm sure there's going to be some silver coming in out of the woodwork. Okay, but so what? I mean, that's going to be your bearish argument. Well, you see, if silver goes to $100 or $200, there's going to be plenty of silver coming out of the woodwork. That's a bearish argument. Let's get there. Let's get to that $100, $200 mark on silver, and then we'll sit and we'll analyze and see how much jewelry and how many knives and forks come into the market. There'll be some, but does that sound like a reason not to buy silver today at $18, $20? Okay, because you're afraid that $100 or $200 there's going to be knives and forks coming into the market? That's like patently absurd.
True enough, and a rising price increases the demand by investors. So I don't think we have to worry about that. The way we're not going to see anything like we saw in 1980. Put it that way.
Can't be. The stuff that was melted in 1980 or the stuff that was melted in 2011 can't be melted again, and that's the mistake that all these they see these quote unquote analysts that are worried about this kind of silver that might be held in hands. It's like held by millions, if not billions, of individuals that it's easy for them, okay, to look out there and say what these people are going to do. I mean, that's like...
What do they mean when they say that silver is used up and is gone forever?
Well, I mean, that's a legitimate thing because silver is an industrial, vital industrial item, a commodity that's put into, more uses than just about any commodity in the world except for perhaps crude oil. It's used. It's like of the 800 million ounces, if we're still mining 800 million ounces with the coronavirus and disruptions to mining. If of the 800 million ounces that are mined each year, 600-700 million ounces of it goes into solar panels and iPhones and televisions, anything that conducts electricity. You need silver. It's like it's the best conductor of electricity, and when you use it for those purposes, which is what silver is basically used for, it's off the market. It's like it's not something that is available for investors. It's like there's a very limited amount of the silver that's produced each year is actually available for investment. Unlike gold. Gold is a little different because it's so expensive. We don't, you don't use it as much, hardly at all, in industrial items in consumption, okay? So most of the gold that's available, that's mined each year, is available for investment or investment-type jewelry, particularly in Asia. In any event, we don't have that in silver. It's the opposite. It's big consumption, and there's just not enough silver available for investment when you sit down and try and figure out how much is left over after we use it for the things that we need it for. I think that's what you're referring to.
Yeah, another thing is that my company stresses that people get the silver in their physical possession. And if the price does what you were suggesting it might, there's an awful lot of short selling In other words, people think they have silver stored. They really don't have it. It's a paper caper. And if the price goes up, these people are going to maybe have some problems delivering or getting the silver. I mean, there's all kinds of issues that arise when you don't have it in your hot little hand.
Absolutely. I mean, that's the first rule of thumb is that if you don't have silver, the very first thing you do is you get silver in physical form in your own possession, coins, silver eagles, maple leaves, basically things that you can hold. Where the problem comes is after you get enough physical silver that you can withstand and any financial catastrophe that might occur. When you hold it in your own hands, there's no counterparty risk. You're not depending upon someone else not going out of business, and taking your investment with it. That's going to happen. That has happened in the past, as you know, and it's going to happen again in the future. If you get to the point where you're putting substantial amounts of money into silver, then you kind of don't have much of a choice. You kind of have to, have it professionally stored for you, never with the dealer that you buy it from. That's the biggest mistake in the world. Never store the silver that you buy with the dealer. Make sure the dealer is arranging third-party professional storage in case the dealer goes out of business, et cetera. You need that protection that you're not just leaving the silver where you bought it. That's a big no-no. So you have to make sure that either get it in your own hands, but after a while, because silver is so cheap and you get so much for your money, at some point you start putting in serious amounts of money, then you got to have it stored someplace, but you got to be real careful about where you store it. And there's too many I see out there. I'm not going to say which ones are bad or good, but there's.
I can add that we store at Brinks, and
good.
I think that's
good. No, I know that. I mean, that's the reason but there's plenty of dealers that will make it easy for you. And just leave it with us, and all you're really getting is a piece of paper saying that you own silver when it may not even exist. There's been many cases, and I've been involved in them, many cases with big names like Morgan Stanley, that was basically saying that they owned silver on behalf of customers, and then when it was probed and dug into, it turns out they had to admit they didn't have it, and that goes on all the time. So you have to spend some time and make sure that you're storing it in the right place. The easiest way around it, of course, is have it delivered. Have it delivered to your house, to your office, and store it yourself. But once you get past a certain point, you gotta resort to some kind of professional storage. Just be careful what you're doing, because there's going to be a lot of heartache. There's nothing worse than having bought a decent sized chunk of silver, see it go up in value, and then find out at the end that you didn't buy the right kind. The dealer or whoever you bought it from is out of business. It happens all the time. And you're left with nothing when you should have had a giant profit. I can't imagine anything worse.
Hey, Ted, thank you. I think that's good for this morning. We covered a lot of ground and got some of your insights. And, hey, we'll do it again soon. Thank you.
Sounds good. By the way, Jim, there was another 3 million ounces went into two ETFs, so 1.8 million to the SLV, 1.2 million into Sprott. So it's never ending. It's like an average day, another 3 million. Now they did knock it down in price overnight this morning. That same old, crooked COMEX game. The vermin come out to play at night, and can do anything that they want. It looks like it's starting to recover here a bit, but it's like more I think about it, it's a pressure cooker. It's like there's just too much going on, and once this lid is breached, it's like I don't know how it won't explode in price in a matter of days. But
I'm excited.
Yeah, we'll see what happens. Okay, good. Talk to you later. Bye-bye.
Are silver prices set to explode? Independent silver analyst Theodore Butler claims that the coming price rise in silver will be written about for 100 years. Butler says the price explosion will be like an atomic bomb, on a hydrogen bomb, on a neutron bomb. Read these astonishing price predictions taken from his $400 a year newsletter. Call Investment Rarities at 800-328-1860 and get his powerful free report. 800-328-1860.